Welcome back to Business Week here on Arise News. Now, as Africa's insurance sector grows, affordability, accessibility and knowledge gaps prevent a critical mass from benefiting from its services as a safety net in the face of economic shocks. Recent reports reveal that insurance penetration contributes less than 1% to the Nigerian GDP. This result signals an urgent action to address deep-rooted challenges that exclude people, specifically low-income earners. Will the introduction of technology in the insurance industry drive a higher adoption rate? Joining me to address this question and more is Emmanuel-Olubake, Investment Director at Novastar Ventures. Toyin actively supports entrepreneurs building Africa-focused businesses such as Turaco, one of the fastest-growing Insurtech companies on the continent. I also have with me Oniya, a seasoned technology expert in the delivery of enterprise and mid-market technology solutions. Stephen is CEO of Soft City Group. Thank you for joining me this morning, Toyin and Stephen. Thank you so much. Okay, let's begin. We have quite a lot to go through, but let's begin with the stats. I'm going to start with you, Toyin. Insurance penetration rate in Nigeria, less than 1% of total GDP. That's abysmally low. What are some of the important factors you would say contributing to this reality, and what are some of the solutions around it?
Thank you, and thank you for having me. I think when you think of the insurance space in Nigeria, one of the biggest things that has sort of hindered the penetration is, like you said, the knowledge gap, which leads to a trust deficiency, because people then get the view that even if they're aware of insurance and they pay for it, then they're not going to be able to make a claim successfully. And so that has been a challenge with really driving deeper penetration. Another thing I think has been a big challenge is also the distribution. Just, the dynamics of Nigeria are not easy to get around. So actually accessing that last mile customer and being able to transact with that person is also a challenge. And as we talk about it, I think technology is offering some great solutions to some of those challenges.
Right. Okay. I mean, we're going to come back to a few of the things that you said. But of course, talking about technology, Tech is your forte. So let's look holistically now. When it comes to the deployment of technology and innovation around sectors, across sectors, not just the insurance space, what are some of your findings in relation to user adoption?
Okay. When you are deploying or implementing technology solutions, the critical problem is resistance to change. But in terms of adoption by organizations or niche-based sectors, another challenge they have is a clear understanding of the generational shift we're currently having. And let me just put it in proper perspective. You see, we have the baby boomers, which are those within the age of 59 to 77 years old. We also have the Generation X, which are those within the age of 44 to 58 years old. We have the millennials within the age of 29 to 43 years old. Then we have the Gen Zs and the Gen Alphas. Now, you see, there's a generational shift of those who are actively adopting technologies. They're always online. They're mobile. They stream data. They engage, and they are the close to retirement generation, which I mentioned, the baby boomers. Now, if you don't have a clear understanding of the peculiarities that shapes these different generational shifts, you won't be able to create target-based technology solutions. And for those of us in practice of computing, these are the challenges we've had. People have a particular perception of what they're trying to achieve. And the consultant is seeing it from a different perspective, knowing this generation, that is your target market, needs to be approached in a different way. And I'm just going to give you a quick example. Yes, we have a Swedish company, Bima, who had an Insurtech infrastructure. They've been since inception, 2011 or so. And Bima targets create small ticket insurance for those with income lower than $10 per day. $10. Now, the level of success, they now have a growth rate of about 20 million subscribers. Now, because also, if you look at clients like Singapore, UK, Australia, they've scaled down or reduced or relaxed their regulation so that new players, innovative players from different sectors with an Insurtech approach can come into the market and experiment their ideas in a client segment. we need to make room for a different generation who will come with a different kind of idea. They will disrupt the industry like the fintechs have done. They won't come with the regular insurance operations. They won't come with the regular branch networks. They won't want to use the legacy IT systems. They will come with new ideas. And their segment that they will create their products for might actually not exist. They might actually create it out of nothing. So they need to relax the regulations, as has been done in Australia, Singapore, and the United Kingdom.
So you're saying a more targeted market study for the consumer is a more ideal approach in terms of technology.
Absolutely.
Very briefly, could you give an example of how you would approach a millennial in relation to a totally different group?
Okay, fantastic. Pardon me, I'm going to reference 3 laws in computing, which is the Morse law, the Metcalfe's law, and the Reel's law. And these are the laws that have shaped the evolution of technology and how content goes viral. Now, yes, we have, I think according to, there is a survey by Statista, I think in 20, and it said, it discovered 97% of people surveyed don't have an insurance. They don't, 97. And DataFight gave a report that complemented that survey by saying only 3% of Nigerians have health insurance. Now, the problem is approach. And now that you've asked about the approach, you need to first understand that the way we perceive technology and we engage with content are different. Our baby boomer generation, they probably don't have much time on Facebook. They don't have much time on Instagram. They don't give more hour of their attention to their phone like the millennials do. Now, that is where, when you talk about getting people to adopt and trust an insurance infrastructure, that means you are telling us to have faith that when we make a claim, we are guaranteed you will meet the end of the bargain. And I've heard people say low standard of living is one of the reasons why people don't get insured. I don't agree, because that's more of an opportunity than a barrier. Because people give their trust in God. People rather say, I will pay my tithe in church, pay my offering, and trust that God will insure me.
Right.
So it's not a problem. So you need to approach data differently. You need to approach these laws of computing and communicate to them. Let people know. If you talk to millennials, do a survey. Some of them don't even have an idea of the kind of insurance policies that are available. So,
right. And let me come in there. Of course, Toyin, you did mention a couple of things earlier. So talking about trust and faith, let's also go back and look at the rudiments. Is the problem the product itself from a sensitization perspective and knowledge gaps? How would you sensitize the public, the Nigerian public? Because when I look at other markets in Africa, like South Africa, they are very insurance knowledgeable. In fact, it's almost compulsory for you to insure every item you have. I don't even have to be convinced to do it. So what is it? Why is it taking such a long time for this adoption in this market? And how, more importantly, are you going to sensitize the Nigerian public about the benefits of insurance?
Thanks. That's a great question. And I think one of the things to bear in mind is that it's relatively recent that Nigeria has passed microinsurance regulation, which allows for those targeted products to be designed and delivered. So you mentioned accessibility as one of the problems, and I forgot to mention that, but I completely agree. I'll use an example of HMO versus one of Turaco's products called Hospicash. So HMO, probably we all have those sort of products. We need medical services, we go to a hospital, they check if we're covered by HMO, and even that process can be frustrating, take time, so on and so forth, but that's relatively easy. What will typically happen when you're getting your HMO cover is that you want to make sure that the hospitals you prefer to go to are covered there. But for the folks who are then in the lower income segment, it becomes more difficult for the HMO companies to have the broad coverage around, think of peri-urban Nigeria. It's not just Lagos, it is tier 2 cities, tier 3 cities, and even larger villages and so on around. It's a lot more difficult to think of the HMO model penetrating that deeply. Now, what Hospicash does is it allows for people who have, any medical emergency to go into the hospital, pay for the care, particularly if they have to stay in for a couple of days, and then the cover kicks in for any stay they have over 2 days. And so that then they don't have to worry about, am I covered here? Can you sort out my HMO? Things like that. They just go in, get their care, they have their receipts, they can make their claim. One of the other things that microinsurance does is, again, when you think of typical insurance policies, you're paying once for the entire year. or maybe twice if you're lucky for the entire year. But then a lot of our lower income people are daily wage earners, weekly wage earners. And so even if the amount is not big, that cash, it's difficult for them to depart with a year's worth of services for cash. And so microinsurance then can allow people to, in some cases, pay daily, pay weekly, and that makes a big difference as well in terms of not just affordability, but the accessibility of affording the cash that comes out. So those are some of the ways that with microinsurance regulation that's now come in, people are becoming better equipped and better sort of enabled to provide those targeted products that can make a difference.
And still on that, in terms of sensitization, what kind of outreach tools are being used to educate the public currently within the space?
Yeah, that's a very good question. I mean, so for someone like Turaco, they work with partners, and partners, to use an example, someone like MCOPA is a Turaco partner, or PayHippo. PayHippo is an SME lender. And so PayHippo already has relationships with end users that Turaco is trying to reach, but they're not an insurance company. And so Turaco then allows PayHippo to leverage Turaco's technology and expertise in insurance, relationships with underwriters, to design targeted products for their own consumers. And so the outreach is then, it's not necessarily billboards, but it's coming through a trusted relationship. And we mentioned trust as one of the problems. And so that makes it much easier for the people to believe that, okay, there's something worth trying out here. And so that's one of the things. Turaco will also, for instance, have call centers. And so, the idea is to not be a burden to those partners that they're working with. And so establish the relationship with the partner, but then Turaco has the call centers to then, again, it's a lot of direct, because you're trying to build that trust, there's a lot of direct outreach that's required, and that's what those call centers are very, very useful for as well.
It's good, refreshing to hear that that's happening. So of course, we have the product, we have the technology. But what could go wrong? And I want to talk about the challenges within the Insurtech space. Stephen, if you'd go with that one, please.
Okay. Well, a lot could go wrong. a lot, because there's no sector that can survive on its own without policy backup. There was an Abuja declaration where African leaders jointly agreed that they should commit 15% of their budget to the health sector. Nigeria have not done half of that so far since that declaration, and products like Turaco will eventually bridge these gaps, no doubt. Now, you see, regulation could be frustrating, at the same time could be productive. Now, the history of regulation, insurance regulatory in Nigeria, I think dates back 1961, if you can remember, by the Insurance Act or so. And the NICOM Act came into force to regulate and evolve this industry. Now, they need to lower down the power of this enforcement to encourage the disruptive mindsets of innovators that are coming in and are not necessarily going to make the incumbents out of business or take them out of business, but that would be able to come up with dynamic ideas and partner with the incumbents and be able to experiment with markets that currently have not been discovered. Now, so if that is not done, you are going to stifle creativity, you are going to kill innovation, and you are going to limit the potential for growth. Because this industry, yes, it's less than 1% penetration, and we are one of the lowest in Africa, the worst in Africa. And if this industry is not opened up the way fintech was approached, if it's not opened up and Insurtech companies like Turaco comes in place and do things, discover markets. And I like the fact that he gave an example of the HMO, the health management systems. You see, the NHIS have actually attempted to take care of our health. They make a significant attempt, but it did not work. The awareness is zero. People actually think that NHIS is a civil servant thing. People, and the problem is the way and manner with which they incorporate technology and implement innovation to get people's attention and get them to adopt the old health insurance scheme. So they need to look this regulate, but they are very strict. For example, there is a provision now made for web aggregators, I think, where you can create lead management systems on behalf of insurance partners, insurance companies, and you can partner with them and you help them generate free leads. And if you look at the regulation for a web aggregator, it was so steep. And the truth is, people like Turaco have ideas. In short, they might have a market where the incumbent insurance operators are not thinking about. They need to relax. What they should think. Look at what Australia have done, what Singapore has done, what the United Kingdom have done. Technology requires a lot of heuristics, and what I mean by that is there's a lot of trial and error. You know, for those of us in this practice, we know at times you will just be sure you will get it right, and you will get to a junction, and you ask yourself, "Oh, what's going on?" And you have to, so they need to make room for that.
Right. Yeah. Well, I mean, talking about heuristics, and I like that you bring that up. We are in the age of technological, trends and innovation. We have machine learning, we have artificial intelligence, and this is going to be a question for you both, with Toyin to go ahead as well. How could we possibly replicate and use these tools to drive affordability and accessibility? Those are key issues. These are key deterrents to the market. So very briefly, if we can please get from both of you how these technological advancements could be of use to the industry.
Absolutely. So in one instance, you can think of things like fraud detection. I mean, it happens in insurance. Fraud is a big thing in insurance industry globally. And so insurance companies do have to be very, very careful about how they are assessing where fraud happens. And that can be a very, very engaging and involved process. And so this is one of the areas that artificial intelligence can be quite useful, because it can help to cut down the costs that companies are bearing to make sure that they're managing that end of their risk carefully. I also mentioned call centers for a company like Turaco. And then again, you can have bots and different forms of AI that will be quite helpful there, reducing the cost of their ability to not just reach the customers, but as I pointed out, because you're building trust and you have to reach the customers in a oftentimes personal way, that then helps to manage the cost of doing that and enables them to do more as well.
There's a lot of hope, and unfortunately, we don't have enough time for me to take that, but I'm sure you concur, you agree with what Toyin said. Well, I want to thank you both, Toyin and Simon, for being with me this morning, and that's it for today's edition of Business Week. Thank you for watching. I am Abby Owolawi. Rolake Akinkobe Filani will be back with you soon, and until then, enjoy the rest of your weekend.